Sell me on storage. Why should I be investing in storage? For example, if I wanted to invest in your fund, what kind of return could I expect as an investor in your fund that's deploying it in this self-storage space?
Yeah, so typically what we're focused on, Chris, is value add self storage. So the team at Reliant has a pretty deep understanding of the asset class. Has been around for a long time. We bought our first property in 2009. And so the interesting part about storage is the market is very fragmented. So there are 5 publicly traded REITs. They own about 20 to 25% of the market. So the other 75% is really a smorgasbord of operators. There's regional groups like us, but there's still a lot of mom and pop operators, not too dissimilar to how multifamily was 10 years ago, right? Before a big bunch of institutional capital came in. So for us, our vision of it is you have that historical return. It's done really well. It's got that downside, call it recession resilience. The impressive part, or where we feel like the strategy is built around a consolidation strategy where, a roll up from a private equity world where ostensibly we're taking as many mom and pop operators as we can, rolling them into a portfolio. And then those institutional capital groups that you mentioned, Chris, they have much more interest at scale. So if they can come in and buy a portfolio of 50 properties, that's much more interesting to them than onesies, for the reason you said, because our acquisition cost is much lower than multifamily property. So they need to come in at scale so they can deploy enough capital to make it worthwhile. But I think, for me, and I'm biased obviously, but self-storage, the interesting part, and we're going through it a second time, is with COVID, we've been relatively, I'm knocking on something, it's not necessarily wood, but we've been relatively unaffected by COVID. So delinquency rates in our particular portfolio are under 1.5%. Our occupancy has stayed pretty consistent, and the REITs have reported similar trends, across the country. Our portfolio, we have 49 properties as of today, so we're relatively small. But Public Storage got 2,000 plus, and they're saying the same things we are. So it seems like the asset class, no matter what happens economically, people don't like to get rid of their stuff.
Well, are you taking on only accredited investors?
Yeah, for this particular fund, Chris, Reliance Self Storage Fund 2 with a 506C offering, so everybody coming in is an accredited investor. And I didn't answer your second part of your question as far as return profiles. The projected return, it's a 6-year hold projected return, kind of a mid-teens, 13%, 13 to 15% IRR, or 12 to 15% cash on cash return. When we're all said and done, selling with the sale of the portfolio on the back end. And that's generally where our strategy on the value add underwrites to. Historically, we've sold 22 properties, and our average project level IRR is in the 40s. So over the last 10 years, our timing's been really good. And we're a good operator too, but it's hard not to make money in real estate the last 10 years. So we don't underwrite to that, but certainly historically we've outperformed what we're underwriting today.
Do you think you can continue with that type of trajectory given, just the overall inflation of asset prices at this point?
No. I mean, I hope we underpromise and overdeliver on the fund for sure. But, unless something drastic happens in the asset class, it's hard to imagine those types of IRRs existing in these value add plays. On some of the development deals, there's still meat on the bones for a higher IRR, but different risk profile in those types of deals as well.
Are you guys developing properties, or are you just buying them from existing owners and operators?
Typically more value add. Last year we did 12 deals, 8 of them were value add, 1 was development, and 3 were stabilized. Just kind of a coupon clipper. For us, it's really got to be a home run. We don't have any in the development pipeline right now. We can do a development deal in the fund, but as of right now, we don't have any in the pipeline.
What do you do to add value to a storage unit? Like put up fancier corrugated metal on the outside? Like what does that look like?
Hardwood floors, granite countertops. What else? Yeah, it's a good question. I think there's kind of two ways to think about value add in self-storage. One, it can be operational. So as I had mentioned, the mom and pop type operators, some of them just don't run the facilities well, right? So, there was a facility we bought last summer. The guy hadn't raised rents on in-place tenants ever. So if you came in, if you rented a unit, Chris, 10 years ago, you still paid the same rate. If I rented a unit today, I paid a higher rate. So you had maybe 50 different rates for a 10 by 10 unit. So just bringing everybody up to market rate, there's NOI growth there. Things like tenant insurance, U-Haul truck rentals, kind of the ancillary income items are things that we can do on the operational value add. And then, the more traditional value add is us putting a shovel in the ground. So, we may be in a market where we are doing expansion. So potentially maybe we believe the climate controlled market is underserved. So we'll build an additional 15,000 square feet of climate control, get that leased up. And that's where our NOI growth is coming from.